Welcome to Bears in Exile. Today is April 24th, and we're going to take a look at GE. Now, GE has a very unique spot in this time frame because during earnings seasons and post-earnings season, GE normally will point the direction of the overall market. This has been the case for quite a while, and there's no reason to believe that it won't be the case this time also. Now, GE did come out with earnings on Thursday. They had a very nasty drop, which was kind of surprising, as the first numbers as they hit the wire were very positive. And we're going to take a look and see what that means not only to GE but the overall market also. Here you can see the weekly of GE. We have a strong underlying moving average trend in the long-term moving average. The short-term moving averages are much weaker. We don't have a complete flat line on the weekly, but we do have a lot of bouncing around, which is not good. This isn't terrible. It's not pointing down, but not great. Going on to the daily, we get our first sign of that nasty bar. Dropped $1. Now here's the interesting thing. I'm going to switch this up so you can see. A lot of the indicators are not going to be nearly as important as this, but you have the typical speculation when this happens. People saying, "Oh, the market maker screwed us." This was fear. All the usual suspects of people trying to explain what this is. The analysts saying, "Oh, the numbers for industrial production or something were not to the Wall Street's liking." The secondary indicators are all pretty neutral here. So, but what can we see from this chart? Well, we see that the long-term moving averages are still there. They're somewhat compressed, and the short-term moving averages are essentially flatlined. Normally you would look at this and say, well, this is indecision with or price consensus with a bullish slant, and essentially indecision as the long-term moving averages could break down and this could fall apart. Well, I do think that there is some truth to the idea of the market maker putting the screws to the investors, and here is why. Look at the volume for this bar. It is green, and a bar this big, this volume bar, which is actually twice the average daily volume, it being green, this should not be this size of a red bar. And you can see other bars that are similar to this. The bottom had not too long ago big red bar and a big green bar. Well, what does this mean? Let's take a look. On the 60-minute, we get to see better what's going on here. We are looking at all sessions, so we are looking at the pre-market and after the close of the market. But we have green bars in the pre-market. We also have the price going down in the pre-market. So with buying pressure, the price came down. That's not right. Also, the big green bar from the very first, from the market open, it may look black. It's not. It is very, very dark green. Buying pressure exceeded selling pressure in the first 60 minutes. And we're going to take a even deeper look. Now, the moving averages, I need to note, are screwed up because of this bar. For the moving averages to really tell us really good data, it needs to heal up, it needs to clear up. It's going to take a day or two of information for this to reestablish itself as a proper trending data. On the 30-minute, we get to see more of the pre-market. Notice all of pre-market is green, and the price keeps coming down. That doesn't jive. Also, we finally get to see the first 30-minute bar is red, and it is dark red, meaning that there was significant buy pressure in here, but sell pressure did exceed it. So in that case, this bar does make sense until you get to the second bar. This first bar has 31.5 million with a sell slant. Second bar has 15 million. Notice it is brighter red. There is more selling pressure here, but we have a green candlestick, and it continues to go up slightly. The sell pressure actually intensifies, gets brighter red. This doesn't make sense at all, and then just levels out for the day with the sell being of varying volumes, but being bright red. That should have brought the price down, but it didn't. Essentially, volume this whole day is moving contrary to what it should be doing, and that is, isn't going to tell you that this is a bottom or something. It tells you that something just isn't right. So on the 15-minute, we really get to see it. All green bars in the pre-market. Price steadily goes down. Panic hits, and regardless of what buy volume was there, it went down. That's fine. And notice now it's broken down even more. The first bar, 16.2 million, goes down crazy. Second bar with higher selling pressure, 15.3 million, and then third bar, 9.3 million. All of these are big sell volumes, sell pressure, and yet it goes up. So you could say that the market maker was putting the screws and shaking people out. That's for you to decide. But I would definitely think that the evidence does point in that direction. And then getting an idea of what this means in a different light, I'm going to Stock Consultant's website. I'm not using my sign-on. This is the free version. And you can see that the overall summary is bullish, which doesn't mean that it has to go up, but it's nice. And they give you some reasons. I'm not going to go into them because of time. But here's the important part. $19.95. It is showing a resistance level which is triple strength 10, strongest that they measure. So, is that a good floor? Possibly yes. The resistance below it is significantly less. It is at 1931. If it were to break through this floor, that'd be awful, and it could continue down a good way. But this is showing that there is a strong floor where it is right now. In addition to this, it's showing that there was a 3-day extreme accumulation, which only occurs 10% of the time. What does that tell us? That tells us that with Thursday's action and the previous few days, somebody has been grabbing and holding. It makes sense that they would want to do a shakeout, perhaps. And the money flow, it's showing a negative 10, which is also the top line of what they can measure. So very, very unusual. Now, our moving averages aren't able to show any kind of price target at the moment because they're all messed up because of that bar. This site, however, is saying that a first line target is 2148, which actually kind of makes sense to me. They're also showing a breakdown of 1844 should those resistance levels fail. Now, resistance above from its current spot is round about 20.57, give or take 27 cents, and it is a triple 10, very strong. However, we are at a 1010 support right now, which is great. So there is play in between these two levels, and if I were betting, I would bet that it would go up at least to attempt a test at this level. I actually have a target of 2020, but a more accurate one may be 2040. And if there's a good move in the S&P, maybe it will get to this 2057, test it, break it, drop from it, something. And the other information they have on this site, it's not unlocked because I am not signed on to my account, which I will not do because it is paid content. So there you have it. There is GE, and if it does have a bounce right here, right now, that lends further support to the idea that the S&P is going to continue to climb. And if this was a share grab by someone with power, namely the market maker, then that would make sense also. As always, stock can do whatever it wants. If there's an NDE or news-driven event, it trumps all charts, as seen right here on Thursday. And as always, all investment decisions are your own. This chart and video are for entertainment, education, and time consumption purposes only. If you like this video, please join us at bearsinexile.com. We have an awesome forum, articles, links, videos every night, and we would love to see you there. Thank you very much.